actually came out at 2.5. So a drop in inflation here year over year, which is good news. So it's almost guaranteed that we're going to see a rate cut. The question is by how much? There is an 83% chance that we cut rates by only 0.25%. And if we look over here, there's a 17% chance that we cut it by 0.5%. What's going on, you guys? Back with another video. And today was CPI day, the inflation rate day. And today was a very important day because this can help decide whether Jerome Powell is going to do a 0.25 basis rate cut or a 0.50 basis rate cut. And we're going to dive into this information, into this data. I'll give you guys my thoughts. I'll be honest, family, I didn't wake up late today, but I totally forgot it was CPI day today. I'm not even gonna lie to y'all. I totally forgot. Went over my head. I'll drop off the kids at school with the wifey. Came back and the markets are going crazy. I'm like, oh shit, what happened? And then I realized, like, oh shit, I just missed freaking CPI. But let's go ahead and break some of this stuff down so you guys understand exactly how to read this, especially if you're new to trading fundamentals. And then look at how the markets reacted to the actual data itself. And then I'll give you guys my thoughts and opinions on whether I believe the markets overreacted, underreacted, and on what I think the markets could possibly do next. All right, so we had CPI come out, guys. I'm looking at this through my FX Books Forex Economic Calendar. You can use also investing.com if that's what you prefer to use. I just feel like my Forex or my FX Books calendar is a little bit easier to actually read just because of how they actually put it, previous consensus and an actual, where investing does it like the flip. They do the actual, the forecast, and the previous, but us, we read from left to right, not from right to left. So it's a little bit easier in my opinion. And I like the fact that they have dark mode. I can't stand websites that don't have dark mode. It just hurts my eyes. So I'm using this one right here. But if we actually look at this, guys, we're going to be talking about these four reports right here in the middle. We have the core inflation rate, the inflation rate, and then core, right? Some of these are month over month. MOM stands for month over month. This is the report on a month to month basis. And then the YOY is the year over year, right? So from every single year or a year's perspective. Now, we have to separate core and we have to separate headline because they both measure inflation, but one of these reports excludes volatile sectors like food and energy. So the headline includes everything when it comes to inflation. Core excludes the volatile sectors like food and energy. And this is important because the core is really the one that the Fed actually uses to make determinations on what they should do regarding monetary policy. We have known, guys, that we've been dealing with inflation for a little while. For the past few years, we've been dealing with inflation. At one point, it was above 8%. Now we're actually at some really solid numbers, right? We're getting, especially from a core's perspective, we're getting to the area or to the range that the Federal Reserve has been hoping for, which is great news. So let's go ahead and break this down. I'm going to talk about both headline and core, but let's talk about headline real quick. So we have headline inflation year over year. It was previously at 2.9% inflation. They wanted 2.6. We actually came out at 2.5. So a very small drop in inflation here year over year, which is good news. That is really good news, especially if you want interest rates to get cut, and no question about it actually getting cut. If we look at month over month, this was at 0.2%. They were expecting 0.2 and it actually came out at 0.2. So no change right there whatsoever. So from headline CPI's perspective, we've seen a pretty decent drop in inflation year over year from 2.9 to 2.5. That is helping the case against inflation, which in turn is going to make it easier for Jerome Powell and the FOMC to go ahead and start cutting rates. Now, if we look at core is a little bit interesting. Core inflation year over year was at 3.2. They're expecting 3.2, and it actually came out as 3.2. So we had no change in our inflation from this time last year, right? No change whatsoever. We're at 3.2. We're at 3.2 now. Now, if we look at the month over month, though, core numbers, we were at 0.2% last month, or they were expecting 0.2, and we actually came out at 0.3. So we've seen a small increase in inflation for core month over month. Now, again, keep in mind, headline is important. This drop from 2.9 to 2.5, that's a pretty good sized drop. But core is what's being looked at a lot more and is what's under the microscope. And we've seen a small increase of 0.1% here for core. Mixed data when you actually analyze both headline and core, But that small increase, I think and I believe solidified us only getting a 0.25 basis point rate cut in like a week when interest rates come out. And I want you guys to look at this tool right here, the Fed Watch tool from the CME group. This tool helps us know what the probabilities are, right? So we know that the next Fed meeting interest rate decision is in about a week. And if we actually scroll down and we can see for September 18th, which is when our next meeting is, and we look at the probabilities of an actual change, there is 100% chance that we start to ease on interest rates. We start to cut interest rates. So it's almost guaranteed that we're going to see a rate cut. The question is by how much? If we look at this right here, there is an 83% chance that we cut rates by only 0.25%. And if we look over here, there is a 17% chance that we cut it by 0.5%. So there's a high probability, over 80%, that we're only going to see a quarter of a cut. And that could be because we also just seen a very small increase, but it is an increase in core inflation month over month. It doesn't matter how big or how small an increase is, especially when we're talking about core. That can definitely cause Jerome Powell to be like, you know what? Let's just do 0.25. Let's not get ahead of ourselves. We don't want to, start to cut rates too aggressively because then we're going to have fears of inflation coming back. So I think the smartest thing that we can assume is that they're only going to cut it by 0.25. Now, if this came out a lot lower, and if we seen core inflation year over year get inside of the 2% range, then yeah, I think the probabilities of a 0.5 interest rate cut would have been drastically higher. But since core inflation is remaining kind of sticky, that is probably why we're seeing an 80+% chance of only a 0.25 rate cut. Okay, so that is essentially what we're dealing with here, guys, when it comes to inflation and how it's going to correlate into the interest rate decision next week. And this is important to understand, guys, right? I'm a big supporter of understanding fundamental analysis as a trader. I truly believe, even if you are good at technicals, which is more of an intraday opportunity perspective, right? Understanding fundamentals is just as crucial because it gives you the long-term projection of where these markets can eventually go. Fundamentals tells us how far or when or how long something can move, where technicals tells us exactly when it's time to go ahead and jump in. We are day traders. I'm a scalper / day trader. I've been getting back into swing trading as well. So it's important for me to really focus on the technicals when I'm getting ready to actually execute. But when it comes to fundamentals and I want to look at the longer term vision, the longer term direction, that's where fundamentals comes in. And that's where you can have a massive advantage as opposed to other traders, because you can understand where this market is going long term. Now, if we actually take all that information that we just spoke about and we bring it to the actual markets here, well, let's take a look at the dollar itself. The dollar on the actual release seen a pretty aggressive spike. This was at 8:30. This came out and we've seen a very big spike here to the upside. That is interesting to say the least. Now, we did come up and start to retest a previous level of resistance that we're starting to fail at. But the initial reaction off of the inflationary data, the inflation report, is that the market did not like what they seen. What is the one thing that stands out that could have caused them to not like it? Small increase in core inflation. Because if the markets did actually like it, and if they did take, let's say, headline inflation into consideration, headline inflation seen a really good drop from 2.9 to 2.5. In theory, if we were going solely off a headline, then the dollar probably should have continued to lose value here. Now, why is that? Well, guys, you have to understand, inflation dropping is a good thing for the economy. That is a good thing for interest rates. That is a good thing for all of us because the cost of money is now becoming cheaper and cheaper. And when the cost of money becomes cheaper, people are more open to go ahead and using their money, taking out loans, whatever the case may be, and stimulating our economy. But we actually seen an increase in the dollar because there's still a little fear that inflation is remaining sticky, especially core. So the dollar rising like that, especially when headlines seen a pretty big drop and core only seen a small increase, is very interesting. It's something we have to keep in mind. And we're gonna get into the rest as well. So we've seen a spike to the upside here in the dollar. Let's go ahead and take a look at gold. Gold's seen a very aggressive drop here. Again, the markets are not liking that inflation report as of right now. Things can change though. This could rebound. right? We could just be seeking some liquidity here to the downside and eventually still go upside, or this could continue to drop. If we look at the NASDAQ is also falling right now. Again, the markets did not like that report. This is what this is telling us. The S&P is absolutely tanking as well. So there's fear right now of sticky inflation, all because we've seen this small increase of 0.1% on core. And year over year hasn't seen no change. There's a little bit of fear. If there wasn't fear, then risk on assets would be benefiting and should be increasing in value. The S&P should be flying, the NASDAQ should be flying, and US 30 should be flying. That's what happens when there's no fear, when there's hope, when there's optimism. Indices are absolutely bullish and the dollar is bearish, but we've seen the opposite. So because of that fear off of that small little reading, this is the reaction that we got. Now again, keep in mind, all this can change drastically. Fundamentals is a much bigger perspective. Off the initial release, they didn't like it. Now, what if the dollar actually starts to fall from this level, which is a possibility? I have been bearish the dollar for some time now, and I think that we should continue seeing more bearishness, right? Especially as we are continuing to price in the fact that we're going to get a rate cut. I do believe that this should eventually continue to drop. And I wouldn't be surprised if we actually start seeing it happen right from where we're at now. So if this does drop, then that means that people actually are excited. People are happy about how inflation is going because it's going to pretty much solidify those rate cuts to start coming. So if the dollar starts to drop, the NASDAQ should start to rise. The S&P 500 should start to rise. So US 30 should start to rise. Gold, although gold is a very trickier one because it acts at times as a risk on and a risk off asset. Gold has been moving, I don't want to say identical because it hasn't, but gold has been remaining relatively strong even through periods of fear, uncertainty, and doubt, which is when the safe haven status comes in. But there are also periods in time when gold becomes extremely weak during times when it should be gaining strength. So gold is a little trickier one. There's times where it acts as a safe haven, like the dollar, but then there's times where it literally follows indices and is becoming fearful of the markets. But for gold, I'm interested to see how we continue to react here. I'm bullish gold. I have been bullish gold all week. If you guys been watching my last previous videos, you guys know I've been buying gold literally since the low down here all week. And I want to look for more continuations, I'm not gonna lie. So I'm still very much bullish gold. Even though we had this little sell-off here, gold is a little bit of a different beast. It could be a safe haven or it could not. I think that the safe haven status is still gonna come true. Still gonna come true. So now, if we're looking at current price action for gold, what did we just see? This is live right now. We just seen the market come down, test this low, this area of support, ended up running that support and immediately rebounding back to the upside. Is there a chance that gold actually starts gaining strength on this area? There's a possibility. What I would need to see in order for me to want to go ahead and jump in, if we're going to be conservative on it, the conservative approach is actually wait for the breakout and then the retest of this resistance right here at around 25.40 based on futures pricing. This is the conservative approach. Wait for the breakout up here and go ahead and start to target to the upside, at the very least filling that wick or that supply zone, completely taking it out. The aggressive approach is just taking it now. Why? Because we did actually swept liquidity, created this little doji, and now we're seeing a very strong bullish candle on the 5-minute time frame. Again, this is a little bit riskier because the market could still very well actually roll over and continue to drop following this momentum that we already seen. So I'm a conservative type of trader. All right, there are times where I'm comfortable taking riskier setups like this without actual confirmations of the breaks. Like right now, this could be something like this that you could possibly take if you are a little bit more risky, just based off what we're seeing. Double bottom, sweep of the lows, starting to see some bullish momentum come in. We just had a nice little engulfing candlestick, a little bit more volume right here on the engulfing compared to the previous candle. So this could possibly go ahead and start to gain some strength here. But we are at a major level of structure as well, so it's not like this level that we did just break is a weak level. Like, this is a pretty significant level. So this is possible. You could also just put a stop, a buy stop above that 5-minute engulfing, and if it does flip bullish, hopefully it can start to run. That is a possibility. All right, so I'm gonna keep my eyes on this because I think I might end up taking another position today. Again, this is still the same account that we've been trading, that we started off in the beginning of this week, and I want to see how we continue to react. The only thing I don't like doing is taking buys, and this is why it's a little bit riskier as well, is taking buys while we're below the VWAP. I'm a fan of selling below the VWAP. If we were above the VWAP, then that would be a different story. I'll be a lot more confident in this buy, and then I'll definitely take it, no questions asked. But since we're below it, it's always that risk that this does just continue to drop. Shoot, it could even break above this high just to grab some more liquidity, and then still roll over. Still possible as well, right? Again, we have selling pressure off of the news. I'm just bullish gold just because, I mean, we've been bullish gold for a while now, for months. And I like to continue to ride out the trend. The trend is your mother junkin' friend. And when you're able to continue to ride out with the trend, you have a higher probability of actually winning on your position if you stick with the trend. So I'm gonna be patient with this one right here with gold. I wanna see how we continue to react here. There is a chance this continues to drop, but you know, it is what it is if it happens. But I'm sitting out the markets right now. I'm sitting out the markets until I get something a little bit more clear telling me that it's time to go ahead and jump in. Now, as for indices, these things are just absolutely tanking, right? The NASDAQ itself came, swept as high right after news, grabbed some internal range, or actually some external range liquidity up here, ended up taking out London session highs, immediately found a resistance once above this high, and we started to come back below this range. Now, I was bearish indices to start the week. You guys remember my video on the start of the week? I was already bearish. We've been bearish indices now for a little while. If you really look at this, I mean, this market has been, you know, experiencing a lot of selling pressure, especially this past week. I was already bearish indices, especially leading up into interest rates being cut. Now, we are currently seeing the market continue to drop lower. We swept the highs. We've seen a massive shift in structure that ended up breaking a couple different levels, right? We took out this level, we took out this level. So we are taking some levels to the downside as well. Now, in order for me to want to get involved here, I can't just enter down here for a sell. I mean, I know some of you guys are probably looking at the buy down here at this demand zone, and I understand it. You know, there could see a little bit of a reaction. But in order for me to get involved here for indices, for the NASDAQ, I would like to see how we react off of this little supply zone that we have here. That's also where the VWAP is. There's a chance that we do come up here, maybe sweep that little area, and then eventually continue to go lower. I would love to go ahead and target down to the 18,590s, 18,600 here. I think that would be an interesting area that we could potentially target here for the NASDAQ. So I'm gonna keep my eye on this. This is another one that we're gonna, you know, see if the markets give us a play. Again, I haven't been trading the NASDAQ this week. You know, my focus has really been on gold, but hey man, if this is what the markets wanna play, then this is what the market can play. We just need to be patient and see if we can get a correction here. If we don't get a correction, this continues to drop, then so be it. We don't need to chase it. Not every trading day is an opportunity, right? We're not going to take a trade every single day. That's just not how it works. We got to wait for the best opportunities that make the most sense, that we truly trust based off our strategy, and then we just deal with the outcome, whether there's good or bad. So that's essentially where we're at right now, guys, based on the markets, how they reacted, what price action is currently showing, and I'm just sitting, I'm just waiting. So I'll get back to you if I do decide to take a trade. If you guys are in the Discord, the VIP, I will send you guys the markups that I do end up taking so that you guys can also look at it, and then we'll go from there. All right, we're back. So the markets really ain't doing much. The NASDAQ is still falling. I don't think we're gonna be able to get this pull back here. This thing is probably going to definitely take out Tuesday's low over here, and then we might be able to see a little bit of a bounce off of this level. Maybe the market could just continue to tank. I mean, from what we're seeing, the market just did not like that report. And I actually want to highlight somebody as well that I follow, right? So I use Twitter a lot when it comes to identifying news and getting some updates. And there's actually one trader right here, Ken Shigbo. I believe he's out of the UK. He's dope. He's one of the better fundamentalists out there that I've seen, especially that is in our niche that trades Forex or futures. I'm not sure exactly what he trades, but he's constantly giving out really strong updates when it comes to the news and the data that comes out. And if we look at this, it says US inflation not falling enough and elements of near-term stickiness. So market hopes for a 50 basis point cut from the FOMC next week, diminishing, in my opinion, USD positive. That's exactly what I just said as well, right? Exactly what I just said. You know, so somebody you guys can start to follow if you're interested in really just sticking up with fundamentals. This dude right here. All right, he's pretty dope, really good, and I think he could be a valuable resource for sure, on top of me as well when it comes to understanding fundamentals. All right, and again, that's the thing about me. I don't mind highlighting other people that I feel like are providing a lot of value in this space. I think that's an element that is missing nowadays, right? Everybody's so worried about them and getting the market share of you know, students and being the mentor to everybody. They don't want to give up who they're actually learning. I've never spoken to this dude a day in my life, but I follow him because he provides a lot of freaking value when it comes to fundamental analysis. I really haven't looked into too much of his technicals, but from a fundamental standpoint, he's actually legit. So definitely go ahead, follow him and learn from him. He's constantly dropping game, and then see if it matches with what I believe. From the most part, from what I've seen over the past few months of me following it, we're pretty much very similar when it comes to breaking this shit down. So there's a good resource that you guys can go ahead and take advantage of as well. But in terms of the markets, guys, I don't think we're gonna get too much today. I'm not seeing too much opportunity as of yet. It's already about to be almost 11 o'clock. Typically, I get off the markets by 11. The latest I'm in the market still looking for opportunities. So I don't think I'm gonna be able to get anything today. It's cool though, all right? We had a really good week so far. Nothing too, and I'm excited to see how we can continue to finish out the week. Now tomorrow, I am going to be obviously creating another video, seeing if we can find some opportunities. Then the whole of next week, I need y'all to be tuned in, guys, because we're about to record a lot of vlogs. I'm going on a cruise on Friday for an entire week. We're gonna hit about 4 different islands, and that's gonna be pretty fire. And I'm gonna be documenting the entire thing for y'all, vlogging the entire thing, trading while on this cruise as well. Just still trying to get the money. Shit, we gotta pay for the cruise somehow. It's gonna be good vibes, good energy, good experience. So definitely make sure to stay tuned for that one as well. But without further ado, family, love you guys, appreciate y'all. Hopefully you guys gained some value today on this video. I'll see you guys in the next one.